Krystal, also known as the most famous woman in the world. So today I want to talk about the importance of dollar cost averaging into investments like index funds. And don't get too caught up in these big words. Dollar cost averaging is actually a very simple thing to do. And once you understand this, which is very simple to understand, you will become less afraid to invest in the stock market. So I remember growing up one time, my mother mentioned that my grandfather, her dad, had lost a lot of money in mutual funds, and that's why she never touched the stock markets and she never looked into investing. And for years and years until I was past 30, I did not look into investing in the stock markets because that was the outlook of people whom I trusted at the time. But now that I understand I understand simple and complex topics, but this topic was the very first topic that got me to understand that there is a way to invest in the stock market that is wise and time tested and is a better strategy than maybe many people know about. So first of all, what is dollar cost averaging? So dollar cost averaging is a strategy where a fixed amount of money is invested on a regular schedule, regardless of that asset's price. So what does that mean? It means that, for example, you could take $200 every month and invest that into an ETF, which is just an exchange traded fund on automatic. And I've talked about this before, but I wanted to dedicate a specific podcast just to this so that our brains can wrap around it. So you take that $200 and every month on the same day of the month, that is invested automatically regardless of that ETF's price. So one thing I always want to point out is that the vast majority of human beings, even professional money managers, usually cannot outperform index funds such as the S&P 500 over a long period of time. So we're talking over 10 and plus years. And so that's actually good news for us because it means that you can keep things very simple and simply dollar cost average into stocks instead of feeling like you have to time it correctly, because we are usually not going to time things correctly and you don't even really have to. So the philosophy behind the DCA, and I'm going to call it the DCA instead of dollar cost averaging just for simplicity, but DCA, dollar cost averaging, same thing. The philosophy behind it is that it mitigates your risk from market volatility, and it focuses on long-term growth as opposed to the short-term fluctuations and the short-term ups and downs. So this is a way to mitigate or lower your risk from the stock market going up and down. So as we know, or maybe we don't, but many of us understand that the stock market goes up and down. So even if we don't understand everything about the stock market, I'm sure that you guys have all heard on whichever news outlet that you've heard of, the stock market's up, stock market's down. So when you dollar cost average, those types of headlines don't affect you as much because since you are investing a specified amount over a very long amount of time, so we're talking 10, 20, 30 years, you're not going to be affected by those ups and downs because you're averaging that volatility over time. So it's a very, very wise and solid way of investing. And let's not get too caught up in it because I know that we've gone over it before. but you can dollar cost average into anything. So you can dollar cost average into specific stocks. You can dollar cost average into crypto. You can dollar cost average into mutual funds, ETFs. You can dollar cost average even into, let's say, buying actual physical gold. So this is something that you can do over time with anything that is an asset. But many people dollar cost average into ETFs. And I think I've gone over ETFs before, but just quickly, an ETF is just a type of security that involves a collection of securities such as stocks. And usually it tracks an underlying index, although it can actually invest in any number of industry sectors and it can use various strategies. ETFs are very similar to mutual funds, but they are listed on exchanges. And ETF shares trade throughout the day just like any other stock. One of the features of ETFs is that they provide diversification to investors, and ETFs can invest in many different companies simultaneously, which means that investors can gain exposure to a range of companies or industries with just this single ETF. And ETFs can contain many different types of investments, including stocks, commodities, bonds, or a mixture of types. And so what are some examples of ETFs if you want to look them up? So one stock ticker is SPY, SPY. That's the SPDR S&P 500 ETF, which just tracks the S&P 500. Another one is VTI, if you want to look that up. That's Vanguard Total Stock Market ETF, which aims to track the performance of the CRSP US Total Market Index. Don't worry about all that stuff. These are just some stock tickers that you can look up if you want to look up what exactly is an ETF. So again, SPY, SPY, VTI, V as in Victor, EEM. Another big one that you're going to see, and it's really easy to remember too if you want to look these up, is QQQ. And another one I want to share with you guys is an ETF that aims to reflect the performance of the price of gold bullion. So that is SPDR's gold shares, and that stock ticker is GLD. So those are all some popular choices you can look up. And yes, usually all of these investments are going to have some type of fees associated with them, so you can look around and find out which ones have the lowest cost, dollar cost average into those. So also, I just want to say that dollar cost averaging into index funds can be and is an excellent choice for passive investment because it has what's called broad market exposure. So broad market exposure means that you aren't investing in any one sector, and you're not putting all of your eggs in one basket. So that means, for example, that the ETF that you are dollar cost averaging into can cover a broad range of companies that are in different sectors of industries. So for example, maybe there are some tech stocks, but there's also some industrial stocks such as oil companies, or maybe there's a mixture of other things like bonds, or maybe there's a mixture of other things such as gold and silver. So the idea with this is that you're diversifying in case any one sector of the global economy goes down. You're not going to potentially lose everything because you're invested in hundreds of companies across hundreds of different areas of trade. So again, it's very, very wise. It reduces risk, of course, because of that. It's also very simple. You can do this on automatic. If you really want to, you could take this podcast, go look up a few ETFs and go to your favorite app, whether that's Webull or Robinhood, even though I'm not going to say anything about that, but You can go to any number of companies that do this, and you can you could start dollar cost averaging and set everything up within about 10 minutes, 10 to 15 minutes. Set up your account, and you can look up any number of index funds and ETFs and decide how much is comfortable for you to invest every month or even every week if it makes it easier for you. And I say, even if you can't put a large amount per month into this, that's okay. Starting small is great. Starting and just being consistent is the most important thing, because it's going to be set it and forget it. And this is over the course of your life. So even if it's only a few dollars, put the few dollars in there, because those few dollars are going to double and quadruple and grow, as opposed to depreciating in a savings account or under your mattress, or wherever you keep your cash. And of course, there is potential for better returns. So historically, I've said this before in a different podcast, but I'm going to be going over a lot of the same things here on this podcast, and that's totally okay, because sometimes you got to hear things multiple times for it to sink in, or maybe you have to hear it in a different way or on a different day. So dollar cost averaging allows you to gain the potential for having better returns. And drawbacks and considerations, just really quickly. Yes, there are some potential drawbacks, not very many, but for example, if the market is generally trending upwards, sometimes in the shorter term, a lump sum investment might outperform dollar cost averaging. But again, that would be more risky, right? Because no matter what anyone says, no one on earth can predict the future, and no one on earth can predict what the stock market is going to do. And of course, just like anything else, dollar cost averaging is not foolproof. It's not guaranteed. It's subject to the overall performance of the market. But of course, you can look historically and see things like the S&P 500 going up historically over time, even though in the short term there are peaks and valleys. So, all right, thank you so much. I know this was a lot of information in a very short amount of time, but it's getting late, and I told myself I need to be more consistent with my podcasts. So here I am, and I actually have a really fun announcement to make, which is we are officially holding our very first Zoom mastermind networking meetup group on meetup.com. You can go to meetup.com and look up Millionaire Mentor Method, and that is open to everybody. It's going to be this Saturday, 1 p.m. Central Daylight Time. That's Austin, Texas time. And that's going to be May 13th, Saturday, 2023. And our mastermind is really just to get together, hang out, and exchange ideas. Our whole community is built on the idea that mentoring is the absolute best way to learn, both from the mentee standpoint and the mentor standpoint. So each one teach one is really what this is all about, and we can learn faster and better together. So come join our community. There's already about 20 members to our meetup group, and that's awesome. And yeah, we're going to be doing some stuff in person as well, but for now we're doing our monthly free mastermind meetup, again on meetup.com. You can also go to millionairementormethod.com, check out some stuff there. Also, if you are an accredited investor, or if you are a professional in your industry that is seasoned in whichever industry you're in, whether that's a professional industry like engineering or health or any number of other industries, and you would like to look into becoming a mentor for someone who really needs it and benefiting in all kinds of different ways, you can DM me on Instagram under @MillionaireMentorMethod, or TikTok under @MillionaireMentorMethod, or through our forms on the website. All right, and until then, remember dollar cost average. This is not financial advice, but each one teach one.
The information provided in this podcast is for educational and entertainment purposes only and should not be construed as financial advice, investment advice, or medical advice. The host is not a financial advisor nor a medical doctor or licensed therapist. Any financial or medical decisions made based on the information in this podcast are made at the listener's own risk. It is recommended that listeners consult with licensed professionals such as CPAs, financial advisors, and licensed physicians before making any investment or medical decisions. The host and creators of this podcast accept no responsibility or liability for any loss or damages incurred as a result of the information provided in this podcast.